Friday cheer on the Lal Street following stellar rally from IT majors TCS and Infosys. Sensex jumps over 800 points while Nifty hits a new life high, almost touching 21,900. Nifty IT emerges as the star of the day, adds 1.5 lakh crore rupees in investor wealth. TCS rises on better than expected results. Remain cautiously optimistic on order book, says TCS's CEO K. Krithivasan. Expects better macroeconomic sentiment to drive growth. Meanwhile, Infosys trims its revenue guidance to 1.5% to 2%. More IT earnings on the radar today. HCL Tech and Wipro to post their Q3 earnings. And Prime Minister Modi will inaugurate the most awaited and India's longest sea bridge, the Trans-Harbour Link in Mumbai. Hello and welcome. This is Last Trades. I'm Agam Vakil, and in this show we take you through all that is buzzing in trade today. We start off with the markets and take a look at what's really panning out, how things are panning out for now, and advances. Where when it comes to the Nifty, we are looking at life highs as we speak. Of course, we are seeing gains, and well, the question really is that can we do 22,000 now, because that's not too far away from current market levels. We have already seen the Nifty move towards the mark of 21,900, and at the end of the day, we're going to know whether or not we can, in fact, scale that mark. It does look improbable at the moment, at least 22,000, at least in today's day of trade. Sure, the upcoming week, very much likely so. But for now, we are seeing a lot of advances, and the up move as far as the Nifty is concerned is largely on account of the information technology sector, which has just moved from strength to strength through the course of today. Let's pull up the constituents of the Nifty, and of course that's the IT index, and a whole host of gains coming in there. Right at the top of your sectoral gainers list too. So keep an eye on that one. But let's pull up the constituents of the Nifty. I want to address what's happening with Infi and TCS. Now, Infi and TCS taken together, is providing well over half the up move as far as the Nifty is concerned. That is quite incredible. It's not every day, at least in the past few months, that you actually see that strength provided by something like a TCS or an Infosys. That said, there has been a little bit of a pull as well downwards, and that is largely on account of HDFC Bank and a handful of other counters from the banking space. But it's a pretty mixed day. It's fairly mixed, even in terms of your broader markets, and broader markets to a certain extent at the moment are underperforming the benchmark. So while we do have some gains coming in, it's not as much as what we're seeing as far as the Nifty is concerned. All eyes on 22,000. Can that be a record today, or is that in store for the upcoming week? It's a wait and watch. But the way things are going, it certainly seems like a probability now. But that said, let's talk about all the stocks that we want to take up today. And right at the top of the list, well, we have Firstsource. And remember that Firstsource is another technology company, and a whole host of smaller IT companies have also started to move up. Firstsource is, of course, no exception, but we also have the likes of Coforge, Persistent Systems, along with Emphasis, all of them advancing in trade. But let's talk about Firstsource, because we've seen a sharp up move in today's day of trade, and this is on the back of large volumes. Let's get in my colleague Mahima to give us an update on what's really going on here. Mahima.
Yeah, Agam, good afternoon. So as you rightly mentioned, all IT stocks have been buzzing today, and Firstsource Solutions is also one of the stocks which is buzzing on the terms of high volumes. If we see total volumes of shares traded were approximately 4 crores. This is approximately 5.8% of its paid up share capital. So the percentage of shares that have been traded today is quite significant. The highest volumes of shares were traded at a price of 212.8 rupees, and currently it is trading at a PE of 26. 26.7 times. Also, the shares were buzzing because a Nuvama report came out on Firstsource Solutions, which has upgraded its rating to buy, and it has raised its target price to 230 from 170. They're stating that decline in interest rates will reinvigorate the spends in terms of business process management services. Also, if we talk about the Q2 performance, the revenue have grown by 3.5% year on year. Their EBITDA has been up over 9.3% year on year, and their EBITDA margins have also increased by 195 base points. However, the PAT has declined 2.2% year on year. About the stock performance, well, the stock has been a multi-bagger in the past 52 weeks. It has gained over 105%. Today, the stock rose most in more than 2 years. It's trading at 20 times its 20-day average, and if we talk about 6 months performance also, the stock has been up over 68%. Talking about analyst recommendations, well, the analysts are bullish on the stock. Out of 11 analysts, 8 say buy, 1 say hold, and 2 say sell. So overall, the outlook for Firstsource is pretty much positive on the streets.
Right, one of the long list of outperformers through the course of the last 12 months, Firstsource Solutions, not too far away from Nuvama's target price of 230, currently trending near 211. Mahima, thank you so much for getting us that update on Firstsource Solutions, and a whole host of other IT companies will remain in focus as we get more and more earnings through the course of the next few weeks and months. But from there on, we move on to another company from the real estate sector. This is a curious one. You won't see too much in terms of what has happened in the past, and a lot can perhaps be left for deciphering as to what we can expect from the future. I'm talking about DB Realty. There have been a lot of changes over the course of the last 2 quarters, but the question is, what can those changes, well, be in store when it comes to the many years to come? Let's get it, Anushi, to find out about the same. Anushi, good afternoon.
Afternoon, Agam. So today, DB Realty is in focus ahead of its large trade that happened when about 1.1% equity changed hands, after which you can see the volumes are also buzzing at about 5 times its 30-day average. So as you see about the stock performance, the stock hit an intraday high of more than 9% now. And if you just look at the overall year performance, also a stellar year for DB Realty with about 100% gain in this one. But I want to bring your focus to the key shareholders that are involved in this company. So let's just look at the promoter group. You can see some dilution in their stake over here from about 59% to 53%, while the domestic institutions are not really there, about 0.06% stake, while foreign institutions have about 2.17% stake. But here we have a key investor, which is Rakesh Jhunjhunwala, whose stake has been increasing from like 1.42% to 1.99%. That's around 2% currently as of September 30th. So that's on the stock, on the how the shareholders are faring and about what happened today.
Right, absolutely. Of course, a key marquee investor figured in that list when it comes to DB Realty. But Anushi, over the course of the last 6 months, we've had a lot of updates with respect to the stock. The stock has raised funds. I believe that the stock has also sold some assets. What kind of impact does this have on the company? What else have you found out around these 2 factors?
Right. So as you mentioned about the raise fund, I'll get to that point later. But like if you just look at the second quarter performance, the company had reported a gain of about sale of investments of about 472 crores and about unwinding of its financial assets of about 209 crores. Other than that, if you just notice the 28th November, in the November period also, the company's key promoters sold about 3% stake to raise about 301 crores. So with the 301 crore, what they were going to do is they were going to utilize most of these proceeds to raise to reinvest in their business and achieve the debt-free status that they had started about 3 years ago. So as of 30th November, the company is debt-free on a standalone basis. So this is with the help of the divesting of its earlier promoter group companies also, and along with this promoter diluting its stake. So that has resulted in increase in cash flows for the business, which they are utilizing quite optimally. They have acquired about 100% stake in Grand Hyatt of Goa, then about 75% stake in the Hilton Mumbai, and about 50% stake in Marriott Hotel and other key properties as well. So that was up. And another point that I would like you to notice is that the company had earlier in September also raised about 1,544 crore through convertible warrants. So that was a preferential issue. And to keep its debt in check and keep its consolidated debt lower, they are also establishing partnerships with other firms by you have Adani Good Homes and Godrej Residency Private Limited. So this reduces their monetization needs for really large properties. So this is all that has been happening in DB Realty.
Right. You know, if you go into the website of the company, it does suggest that it's already finished 2 projects in Bombay, and it has another upcoming 6 projects as far as completion goes in Mumbai itself. So it's certainly going to be a very interesting one to watch based on all the factors that Anushi has given us. Anushi, thank you so much for getting us those updates on DB Realty. It's a very, very intriguing company to keep an eye on. But from there on, we talk about another gaming company, and that's Nazara Tech. Now, Nazara Tech has also, seen an up move in today's day of trade, and it is, in fact, trading at its highest levels in well over 2 years. We have seen this on the back of good volumes too. In fact, its intraday volumes are the highest in 1 month. Of course, we know that the company is in gaming, and it is also into gaming events, and it has a small amount of portion coming in from several other businesses. But what has really panned out as far as Nazara Tech is concerned is a change in your performance metrics. So if you consider the first half, we've seen revenues rise by as much as 13%. Your EBITDA margins as well for the first half of this financial year have expanded to over 10%. And in fact, that expansion in margins is also to the tune of about 180 basis points. So that's something else which also augurs well. Consequently, we've seen a little bit of a delta of sorts, and its profitability has moved up as much as 42%. Of course, there will certainly be one-offs in this increase in profit. But the fact that the company is returning to a growth not only in its top line, but even a better growth in terms of its bottom line is something which is playing in favor of the company. A lot of that is already evident in its first half numbers. And moving on, the question is that can we see even further improvement? Because remember, the Nazara Tech is also one of the other companies where you have a lot of marquee investors who are or were interested in the company. After that, it saw a relatively long bout of volatility, sideways movement, and now it does seem like it's breaking out of its 2-year range. And so keep an eye on that one as well. That's as far as Nazara Tech is concerned. And from there on, we move on to the IT sector. Now, TCS is buzzing in today's day of trade after better than expected earnings. And on that note, we had the chance to speak to the company's CEO, Krithivasan. And this is what he had to say about the company's order book as well as the outlook. Listen in.
I would probably say we're cautiously optimistic. I think the way we see is that the demand, if you look at the order book for the last 4 quarters, has been very strong. The previous 3 quarters, we clocked almost 10 billion order book. In Q3, it was 8+ billion. So it's a very strong order book. And what was not helping is, as we talked about in the past, some of the older programs not getting passed or getting reprioritized. So that is causing a dip in or a depletion in our overall revenue. So as much as the new programs start, like whatever we started in the last 1 year, we are continuing to grow all of them, and they are tracking as per schedule. So to that extent, what would further drive growth would be a better overall economic macro sentiment, which would give the conviction to the people that they can invest more or they don't have to stop the ongoing projects. If you looked at the last few years also, our approach has been very consistent. We always been going to campus or we take trainees. This year also we announced that we are in fact will be the first one or maybe the only one to go to the campus, do the campus hiring. And because once the campus hires come, it's usually a 6 to 9 months time period before which they can be deployed into the projects. In the meantime, if there is any demand surge, we can look into the lateral recruits also. So, but our approach is fairly stable, and we will take a lot of freshers from, when I say a lot of freshers, decent size number of freshers every year, and train them, and that model will not change.
And on that note, we slip into a short break, but on the other side, we get you an update on the benchmark index. Stay tuned in. Welcome back. Stanley Lifestyles is planning to raise about 200 crores fresh issue and sales as it's got the SEBI nod for IPO. My colleague Sesha Sen has spoken to Sunil Suresh, who is the managing director of Stanley Lifestyles, about the company's growth plans as well as the raising of funds. Listen in.
What do you plan to do with the proceeds broadly? What kind of growth plans do you have for the company?
Yeah, okay. So essentially, we have been strong in our home market in Bangalore. Basically, that is where we have been focusing for the last decade or so. And we have expanded across the country. We have 3 different formats of retail. And now we wish to kind of expand further into various other metros, have a stronger presence with all 3 formats in various metros, and then also kind of take the store count or the experience center count to about 100 in the next 2 years. So most of the proceeds will be mainly for front-end expansion and a little bit for back-end expansion. Back-end, we are already quite done with our expansions. We have 2 facilities in Bangalore and we have capacity, not an issue. So most of the funds would be used for front-end expansion and growth.
All right. So, we have seen luxury spending in India growing at a rapid pace. Within furniture, I would like to know from you, how does the demand scenario look like and how do you plan to capitalize on the luxury boom?
Yeah, so essentially the home interior, the furniture industry thrives in the tailwind of the housing industry. So if you really look at what is happening in India, especially, in the last 3-4 years, there is a massive demand that has been picking up for premium housing. So currently, almost 27 to 30% of every project that is being made is of luxury and premium housing, and there's a big demand for it. And we hear they're being sold like a hotcake. So we are probably the only fully integrated Manu retail brand capable of making bespoke furniture for every room of the home. And we have a presence in over 22 cities across the country. So I think as I see, the demand is going to be exponentially growing because there's a lot of inventory that is going to come to the market in the next 1, 2, 3 years. And they say that the housing industry is going to be $1 trillion in probably 2029, 2030. So I think based on this particular demand, we are also expanding ourselves and wanted to kind of be present in the right markets as we go forward.
Right. Well, Delta Corp faces structural challenges as the GST rates for both offline and online gaming have been raised, and there are also substantial pending GST dues. We spoke to the company's CFO, Anil Malani, on its impact on patron sentiment and how festive season has played against the company's revenues. Listen in.
Completed our first quarter with the new post-GST tariff that has been introduced by the government. Okay. So prior to this quarter, you would have guests coming in and they would get full value for the chips that they purchased. The GST was borne by us as a company and we would pay that on our gross gaming revenue.
Right.
Post 1st of October, overnight we were told that we need to charge now 28% GST on every sale of chip that is done to the guest. So from getting full value, when you suddenly perceive to be getting 28% less, there is going to be a resistance.
Right.
So yes, we did see a drop in footfalls. We did see a drop in our revenue for the first few months of the quarter. But over a period of time, we realized that the guest needs to have some compensation and value for the money that they're exchanging for
right.
chips. So we started introducing and took some new initiatives and brought in promotional programs. And for the month of December, as I have been in our investor call and with other media exchanges saying that close to 45% of our turnover for the quarter came only in the month of December.
Right.
So we managed to give back value to our guests. We managed to retain them.
Right.
And going forward from this quarter onwards, we do believe that our business will settle down. Typically what happens is the footfall and the tourist traffic into Goa picks up post-Diwali.
Right.
This time Diwali was late. We also had a lot of festivals prior to that. There were some religious functions where people don't really travel or go out. You had the World Cup. So all this played along. And finally, what actually also happened is that, the previous years you had COVID, international travel was subdued. This time, all destinations close by have opened up.
Right.
You have visa-free arrivals.
Right.
So you don't really need to worry about that. And I think quite a few travelers wanted to venture abroad, and given value for money, I feel that many of them felt that moving outside gave them a better proposition than coming into Goa. They found Goa
right.
to be pretty expensive also.
Right.
Having said that, the number of flights are increasing from various cities into Goa,
right.
from other destinations. So we're confident that the tourist traffic will actually come back. But yes, there was between a 10 to 12% drop even in our visitations.
Right. Well, so we're moving on. We had Ugrow Capital's microloan segment, which has witnessed strong growth. And we had the chance to speak to the company's vice chairman, Sachinder Nath. And here's what he had to say about the factors adding to the book. Listen in.
Ugrow is India's first listed startup. We started by acquiring a small listed company in 2018, raised 1,000 crore of capital, then suffered the liquidity crisis of IL&FS and DHFL. Our first year was 2019-20, and then COVID came. During all of this period, we very heavily invested in both our data infrastructure plus physical infrastructure. From 120 people in 2020, we have grown to almost 1,500 plus people, 9 location to 120 plus location, 105 location at that time. And that has led to the growth because we created a very large base for our customer segment, that 15 lakh to 15 crore turnover segment. And that's why in 2022, we were 3,000 crore, 23, we were 6,000 crore. We are 8,300 crore in the first 3 quarters of this financial year. With respect to your question on the portfolio mix, for this customer segment, we focus on all kind of customer need, whether it is secured term loan, whether it is micro enterprise loan, machinery, supply chain financing. Our idea is to keep around 70% of our book secured by some form of a collateral, predominantly physical collateral, but also provide short-term unsecured financing for customers who need immediate financing. So as a strategy, we would like to keep our portfolio in the mix of 70-30. And in that, given we are now very heavily focusing on the retailer financing segment, the machinery segment, the business loan segment, little bit of volume pickup is happening on that segment. But as a portfolio risk perspective, I think so we are in the same way as we were around a year back.
Well, on that note, it's a wrap on large trades, but don't go anywhere. On the other side, we get you India Markets Close. Stay tuned in.